Good morning, everybody. Welcome back to the Opportunistic Trader. It is January 18th, and we got a special guest. We're joined by Alex Gerchik, a professional trader. He's actually has businesses in Russia and trading is based out of Russia, but he's in New York. He's been a professional trader at a number of different prop firms. How's it going today, Alex?
Very well, very well. Thank you.
So tell us a little bit about yourself and your trading style.
I will tell everybody a little bit about myself. I started in 1998. I'm a professional trader. By professional, I hold all the licenses, Series 7, 55, 63. I started to work as a prop trader in 1998. I started with the $400, pretty much no money. In year 2000, my pretty much second year, I made it over $2 million. The firm was a purely day trading. We only trade New York Stock Exchange. I spent basically, I was many times at the New York Stock Exchange. The most important thing, what I'm looking for when I trade, is how the big buyers and the big sellers works. So I use only technicals. I don't look at the news. I just calculate. As I told you, I've done more than 1 million trades over my career. Pretty much trade every single style, but the style where I try to figure it out. Is a buyer or a seller. In 2006, I was in Wall Street Warriors. If anybody saw that, it was a serial, HBO serial for the traders. I was there as one of the safest traders. 2000, 2001, 2003, and 2000. Yes, 2000, 2001, 2002, 2003. In 4 years, I had 9 losing days in the day trading. So it's better if you ask the questions.
Okay, so wait, let's go back on that one. Over how many year period did you have 9
4 years.
losing days?
Yes, 4 years.
So let's then
Oh,
start with.
2000, 2001, 2002, and 2003. 4 years, 9 losing days.
All right, well,
I was
let's.
at the company. I was at the company WorldCo. The good thing is, Larry knows very well. The owner knew very well the owner of our company. It's very checkable information. The company name was WorldCo. It was the prop firm, very big prop firm. We had altogether a few thousand traders. I was the number one trader in the firm.
Okay, so let's tell me a little bit about the way you look at the markets. You say that you look at momentum. So how do you analyze and what do you look for when you're looking at an individual stock?
I'll explain it and I'll show it. First of all, the problem is with a lot of traders is they don't have a system. That's the most important part to have. My system is pretty much based on the 4 different parts. The number one part is the levels, of course. So, the level, I'll show you how I draw them. It's a horizontal levels, but not just in the way they classic in just the regular books of the Murphy or Schwager or anything else. For me, the most important thing to figure it out where the big buyer or big seller is going to step up and build a position. For the people to understand, the buyer and the seller, they only build the positions inside the channel. They don't basically buy or sell when the instrument is going. So the instrument has to have the energy. So the first thing is the level. Second thing is I try to understand if there is enough, I call it gasoline. So for example, if the stock, or it doesn't matter, futures, I can trade anything. I trade Forex, I trade stocks, I trade oil. If there is enough of accumulation in the channel for the instrument to get enough gasoline for the future going. And the third most important thing, I try to figure it out, the direction. Direction basically is the hardest part for every trader to understand, because if you have a direction and you're right, let's say 85, 90% of the time, then to adjust or attach to your system entrance point, it's very simple. For example, the people said, okay, what kind of pattern do you trade? I don't trade patterns at all. The pattern, let's say it's a false breakout or a breakout, this is just for the entrance point. So the first 3 most important things is the levels, accumulation, and the direction. Direction, I always figure it out that the big buyer, big seller will show you direction for one simple reason. When he accumulates a very large position, he doesn't have any choice. When he's going to take a large position somewhere, he has no choice. He's going to show it to you. So basically, they're trying to accumulate the very large position in a baseline, or let's say at the level. And I'm going to show you some picture to figure it out. And then most of the time they will do falls, to get everybody out, to get more energy. And then basically they're going to start to go. So I'll show you what I use just to prove people why the horizontal level works. And as I said, I don't use them in just a regular way. It's basically just a little different. For example, this is S&P. And for example, if you take the S&P, this is the horizontal profile. It's the company which I use just to look at it. And as I said, I don't draw the horizontal levels based on the volume. I draw them based on how the stock behave itself, or it doesn't matter. In this case, this is the S&P future. As I sold the Larry trade S&P futures, so I will show S&P futures. So for example, if you see here, the biggest volume, it's always inside, because there is where the safe place for the big buyer or big seller to accumulate the position. I mean, usually when it's going to start moving, you see the volume is dropping. So when the instrument is moving, the big buyer, big seller basically just pushing out a little. He doesn't need much because other people are buying with him. So the most and the biggest accumulation, you always figure it out. It's going to be between the, let's say, horizontal lines, between the support and resistance. I usually don't like it calling support and resistance, because when you use the word support and resistance, you would use the word false breakout. The people go right away on internet and start to look for this, which is incorrect, because the books, they basically only describe just the regular plain stuff. So in this case, you can see there is a huge volume on a level of 29.14, and you can see one thing for a fact: the price is always time. I like that word jerking, not jerking. Jerking as far as the fishing, when you basically jerk, to get the fish. So in this case, if you draw the right level, you can understand one thing: this basically the price is all the time jerking around the level, and then you have to figure it out. Who's gonna win. So the most important thing, you have to figure it out how basically the instrument behave, and what's the instrument reaction for the, let's say, false breakout. So when you see, for example, in this case, we'll take 29.14. We see a limit seller right here, because if you see that somebody trying to buy and they buy all the time at the same price, and there is a huge seller which is not allowed in the S&P to go higher, so there's a limit seller. Then they break this limit seller, and as you can see, it becomes the level a limit buyer. In this particular case, it's called mirror level, when the support becomes the resistance. But the very important thing you should understand, it's when it's going to be false breakout, if instrument is going to behave in that. For example, a lot of people, when they don't see this, they're going to try to short the instrument for one simple reason. They're going to say, okay, it basically broke the level. It's tried to basically accumulate over the level, but then it didn't go up. So most of the time it's going to be a seller, but not in this case for one simple reason, because you can see when it was a seller, he couldn't even take the stock, he couldn't even take the S&P to the lower level. This is one of the picture. So this is a pure level. As you see, it does exactly what is in the horizontal. So what I show first where it's coming from. So it's not just my imagination. Again, you see, this is the S&P level, and this is the S&P real chart. So as you can see, there is a real level of 29.14. You can see there is basically people are trying to accumulate the position. And as I said, the biggest accumulation is going to be right here. Then once you're in the channel, you have to figure it out how the instrument is going. That's the worst part, which traders, they don't understand. For one simple reason, they're going to try to go long here, which is totally absurd, and I'll explain for you why. And on a very large channel, for example, 20, 30 points, doesn't matter, or in the stock, the most important thing, how fast and in how many bars it's been basically going through. What does it mean? For example, if the channel, all right, between the levels, range, let's call it range, and it's not going to call it channel. In the range, the most important thing, how fast basically the range has been going through. If the range has been going through and there is a huge level ahead of it, most of the time, it's not going to be that easy to break for the first time. So most of the time, it's going to be a false breakout, or it's going to be just a rebounds, little rebounds. So you have to always watch for the rebounds. I mean, where it goes, how it goes. So in this particular case, the speed in range was extremely fast, which shows that basically he doesn't have any more energy to go. So what does he need? He needs to get the energy. How basically a big buyer and a big seller can accumulate the energy? Very simple. Either in a range, either counter trend. Like for example, when it's going up, and then he's got to pull back basically to get everybody out. For the people to understand, to understand the mechanics of the market, the traders should understand one very simple thing. The buyer can only get the position against the seller, towards the seller, and the seller can take the position against the buyer. If there is nobody sells, he's going to force people basically to give their positions away. For example, if the position is right here, nobody's going to give it to him. So that's why it's no volume. But once he's going to show us, for example, he does this is not going up, the people are going to give him a position because nobody wants to lose money. So it's a pullback, and the people is going to give it to him a position. I show you one stock, UCTT. It's basically just, for instance, as you can see, it's been a huge accumulations. Let's say right here, it was accumulated for a few weeks, as you can see from November 27. It's a recent trade from November 27 to October 12. I'm sorry, to December 10. So 2-3 weeks accumulation. It's a very big accumulation. And now I'm going to show it to you what the stock did. And UCTT, look at this. It went down all the way to $7 a share. So basically, in this particular case scenario, as you can see, very important thing is to figure it out. Where's the accumulation? What's the direction? And how to get it. Now I'm going to show to you usually what I'm looking for. For me, the most important thing. I'm looking for something like this. For me, the most important thing that I would enter the trade, which has a huge potential and which has a very small risk. That's for me. And this is probably because I'm based, my background is a day trader. Right now, I don't trade day trade anymore. I don't need it. I trade the positions. I just told you I had an excellent trade in oil, back and forth, down and up. For me, the most important thing, I figured out the level. Okay, in this particular case, what's going to be the level? If you don't see this and you don't understand how to draw the level, that's the problem. But anybody who stopped a very big move on towards the different direction, it considers a big buy. For example, if you see something like this, right, from $11 to $8 a share, you see a huge volume is basically a huge price dropping. This is approximately 30%, and then somebody's trying to buy. As you can see, it's not going lower anymore. And as I said before, you always have to wait, because all the big moves, they always begin with the false breakouts most of the time, because huge buyer, he needs to get rid of all the guys which is going to bother him basically to do the position. He's willing to lose, because just for you to understand, if he's willing to make $10 million, he can lose $3 million. So if, for example, he can basically buy it right here, and at the moment he's going to lose. But he knows one thing for a fact, that he's going to suck all the volume, and he's going to basically move it for one simple reason, because it's a normal reaction. And most of the time, if you see there is a really big buyer, he's going to repeat exactly the same move. So what in this case, as you can see, exactly the same. Basically, he dropped the stock, then somebody's trying to buy. Here, right here, is the most important thing. You have to figure it out. I mean, he's basically staying here for the continuation to the low side, or basically he's here to accumulate the position to go up. And the most important thing, you have to figure it out, the volume. So you see the volume is slowly dropping, which shows there is basically no seller. Because as you know, and as you understand, the volume only basically become big where it's two big players, buyer and a seller. When you basically have one simple buyer, like I showed you in the previous picture, the volume is not going to be big for one simple reason, because he doesn't have anybody who's selling. So it's going to be like a straight line. But basically, if somebody's selling it, the volume is going to go right here. You see, right here, the volume is big for one simple reason. He basically clean out the whole seller once, and then, as you can see, the volume is start dropping for one simple reason. He doesn't have anybody ahead of it to sell. So the most important thing is how to draw the right level. It's usually either the limit buyer, like in this case, you can see there's a limit buyer and there's a huge accumulation, or you can see the price goes down and then price goes up. So in this case, the most important thing is how to do it right, because in this case, you can enter the trade with a very small stop. Where you put a stop, behind the fake levels. That's the most important thing. And one thing for a fact. First of all, you have to watch for the reaction of the false breakout. For example, in this case, you see he does all the breakouts, but he's not going up. And he's not pushing the stock down. What does it mean? He's accumulating the position. So the big buyer or a big seller, he can do anything he wants in the market when he needs the accumulated position. As you see, he lets everybody, looks like he's buying it. So the people try to buy, he push everybody down to suck their position. So if they're a seller, he is a buyer. And then the most important thing at the position when you have with a very small risk, you enter the trade. So I'll show you The stock API rent that I shorted. That's people who don't believe they can go online. I have a Facebook channel. Unfortunately, it's in Russian, but there is a stock API rent. I show it was a real trade. I shorted the stock much longer, but I'll show you how it works in a big time frame and in a small time frame. This is a real trade. It's a huge level. As you can see, somebody sucked a huge volume right here. You see, basically a huge move from $5 to $3 a share. You have about 40% move to the downside, and you see there is a trying to be accumulation. So right here, he does again false breakout. I'll show you just a little bit bigger. He shows false, and then he's not taking the stock down, because usually a very important thing when the instrument is going lower or higher, it's a retest. What is retest? If, for example, he didn't pull, but like here, he's trying to go on the retest. Here, also a very negative sign, as you see in the regular technical books, they call it descending base. What is a descending base? When every high is lower than the previous high. So in this particular case scenario, why he does that? You understand one thing, he's getting short, and if he's going to pull the stock higher, nobody's going to give him short, because all the people who is shorting the stock in this particular case scenario, they're not going to give it to him for one simple reason: they make money. So once you make money here, you're not going to give away your position. So only by basically pulling the stock against it, he's going to rebuild the position. In a lot of books of the technical analysis, they just basically figure it out. This is a descending base, but nobody can explain why did it happen. That's the problem. So, like for example, when I teach people, I tell them this is the mechanics of the market, and you should understand why and what they're doing. The beautiful part is, if you're wrong, you just get a stop loss. That's it. It's not a big deal, But if you're right, with a little risk, you can have a very large gain. So in this case scenario, as you can see, he is breaking down, and now I'm going to show to you the same chart. You see, that's what he does. He has a huge limit buyer right here, huge limit buyer, and I am supposed to have a API rent. Somehow I don't have a. I'm supposed to have a right here. So in this case scenario, you see, there's a huge limit buyer, and he's going to show it to you. So in this case scenario, why he shows the limit buyer? Because he has enough of the position. When basically a huge buyer or a seller building up the position, they're not going to fake it anymore for one simple reason: they're going to break the beautiful chart. So in this case scenario, you see he's trying to basically jerk around the level, and right here he's building a huge limit. This is a 1 hour, so you have no risk to enter the position. That's the beautiful part. And I even show you right now a huge level, the Alibaba, which is a basically expensive stock. You see, nothing here, nothing, which basically is going to get your attention. But if you go in the 60 minutes, look at this. You have a huge seller at 205, huge seller in an hour chart. Look at this. Why it's a seller? Because every time he tries to break up, he doesn't have energy. Why? Look at this. He already went up a lot. He doesn't have energy to go. He needs to build the energy in order to go higher. So what he does, he's trying to break, and it's a false. He cannot go. And then, as you see in our chart, he shows the exact and beautiful level to enter the trade. So most of the time, I'll show you a few more charts. You see, that's what I look for. LMAT. Honestly, I don't care what the company do, even though I do know fundamentals very well. And on the course of the 20 years of my trading, I know lots of stocks. But in this particular case scenario, you can see that you have pretty much no risk. You can enter the trade with the 10-15 cents stop loss. I trade. I'll show you a chart for the oil, and you'll see that oil you can trade sometime with a very small stop loss. So in this case scenario, you can have a very small stop loss, 15-20 cents, and you have a huge drop of 25%. Right here, you have a $10 gain, pretty much towards the 25 cents. This is a 40-to-1 position. And I'll show you this is the best level what you can have, you see. And it's not, I just show you a few examples, but don't look, you can see a lot of not expensive stock. I'm not the pump and dump guy, even though I know very well pump and dump strategy. But, I try to figure it out and to show you the pictures that if you're going to look for the trade, with the ideals level and everything else, you can really find one. Now I'm going to show you because, I know a lot of people, they trade, somebody trade Forex, somebody trade futures, gold and everything else. For example, this is the a gold level, you see. So, what I figured out, I always have levels. I know what I'm going to trade. And this is exactly the same level on a gold, which was in the previous chart. So one thing for a fact, you have to figure it out. First of all, as I said, level. This is the whole mirror level. I mean, when there's a support becomes the resistance. This is a very crazy level. And just for you to understand, if you read a lot of books about the trading, you figure it out one thing. After the stock is dropping under $5, particular stock, you have a lot of firm to liquidate in their position, because a lot of, let's say, mutual funds and a lot of funds, they're not even allowed to have to hold the stock which is trading under $5. And there's an even worse situation if the stock is holding for 30 days below $1. There's always an issue. So that's what I'm looking for. You see, in this picture, you have a huge limit seller. Just for you to understand, it takes a lot of guts on a daily chart, and this is an all daily chart. I trade on the daily chart. It takes a lot of guts on the daily chart to basically stay against everybody. Don't forget, he stays here against the trend. So that guy is the big guy, and he knows exactly what he's going to do. So in this case scenario, you have a huge seller at 30.50. You have no risk, and you can take a very nice position. Mike, I mean, you can ask the questions, and if you like it, I'll show more.
Yeah, no, that's really helpful. I guess one question I have is, how has the way you analyze the markets using this pattern and using the momentum and volume, how has it changed, since you started trading to where we are now?
I'll tell you one thing, and you would never believe it. I do a seminar only in Russia. They asked me to do it in the United States. United States, this is like a place for me to relax. I'm spend time with my family. I really do. I start trading in 98. In 2000, I used to trade 300 to 400 stocks a day. I used to do 1,500 to 2,000 trades a day. The people who've been with me at the company, they know that. They call me Crazy Russian. And when I do seminar, obviously I tell exactly what I'm telling you right now, just a little longer. It's an 8-day seminar. It's not 1 day or 3 days. It's an 8-day seminar. And I teach people to understand the mechanics of the market, where basically a big buyer and a big seller, and I'll show you a few more pictures after that, where the big buyer and the big seller is going to capitulate. That's what I'm looking for. I'm looking for capitulation of the big guys, where they're going to get out. In all seminars, I have a one trading day. So one day on Sunday, we do prepare the homework, and on Monday we trade. You'll be surprised. I trade exactly the same way I trade 20 years ago. What's changed? And if you remember, when we had an interview with Larry, I asked Larry the same question. And just a little thing changed. And Larry trades for 35 years and a much better trader than me, much bigger trader than me. For me, he's an idol in trading. And when I asked him a question, he said, Alex, I trade the same thing that I trade 20 years ago. Mechanics of the market, they would never change for one simple reason. There's a two player in this market. There's a buyer and a seller. It's no one else. Yes, of course, there's the computers and a lot of volume go through the computers. But the computers, basically, they're not trying to compete with the trader. They try to compete for the price. You understand? If they've accumulated the position, it's not their job to take away anything from you. It's always a job for everyone to take away something from you so I can make money. But towards the Larry conversation a week ago and me, nothing changed. I mean, just some time, the market volatility is a little bit bigger. The stop can be just a little bit bigger. But if the instrument's supposed to go down, it's going to go down no matter what it is. And if it's supposed to go up, it's going to go up no matter what it is. I don't pay attention to the politics. I don't pay attention to the, let's say, news. I trade pure chart. That's it.
What's your typical time frame? Typically, once you decide that there's a trade.
Daily chart, and then I try to go in a little smaller time frame just to figure it out more, like a more exact entrance. I do very simple thing just for you to understand, and I want people to understand. I do, like, for example, pages like this with the stocks every single day. I do homework. So what I have this, a lot of pages. And every single day when I do homework, I put everything what I'm looking for. I only trade from my list. I don't trade the market when I don't understand. For example, a lot of people, they open a chart, they open the filter, for example, they look for something. For me, it's totally different. Every day I sit down, I have everything in a list what I'm going to trade. If it's supposed to be a swing trade, let's say, or a intermediate term trade, I would definitely get ready. I would take a week or two. I would definitely see what's balanced there. How's basically he's behaving. So my time frame is very simple. It's a daily chart because I work only with the price. I don't care about anything else. And sometimes I can go on smaller time frame. I'll show you one of the trade. Unfortunately, it's written in Russian, but people would say this is a recent trade. The stock called LGND. Unfortunately, I didn't see it through the whole move. I did it. I showed the trade for my students. As you can see right here, it was a huge level right here, 126.76, and then on a 5-minute chart, you can see the stock is schlepping around usually because before he moves, he has to take the position. And if he's going to stay like this, nobody's going to give him a position. So he's taking, and then you see right once he's dropping below the level and couldn't go higher, it was a trade. It drops huge. It dropped $25. I only make $4. In this case, but my stop loss was less than 50 cents. So I did made a very good trade. So that's what I do. Daily chart for analyzing direction, how much I can make in a trade, and then 5 minutes to get it.
So has the increase in algos over the past, decade changed the way you trade at all?
No, absolutely not.
So it doesn't confuse the volume at all, or doesn't confuse any of
I
the
don't even,
patterns?
I show you the chart. Most of the time, I don't even look at the volume. No. And it's honestly speaking, I'm a tough Russian guy. And honestly speaking, a lot of people, they just find excuses for themselves. The most important thing, listen, I'll tell you a little story. I had a student, he was 18 years old. And, I teach him, and it's a very smart guy. And one day he came over to me and said, Alex, I never saw anybody who lost money because they did not understand technical analysis. People lose because they don't follow the rules. Larry stays in the game for 35 years, and that's what I want to figure it out again for myself when I took interview from him, because he doesn't change and break the rules. That's the most important thing. You understand? That tradable, trade it. Has to be flexible. You got to know how to adjust. That's the most important thing. Of course, the market is changing. In the last few months, we have an S&P, huge moves, 5-6% a day. I've seen something like this from 2008. And by the way, 2008 was one of the best year in my career. I make most of the money. I made even more money than I made in 2000 in the beginning of my career. But as Larry said, the same, you have rules. You follow the rules, very simple. Of course, when the market is changing, you have to adjust. You got to become more flexible. That's all. That's a very important thing. Everything else, it's totally irrelevant. People, 95, like no one else, know why people lose. First of all, I was a part owner of a day trading firm, Whole Brothers. And I saw why the people lose. People lose because they don't follow the rules. You understand? It's not like that I'm sitting home and I trade my own account and I don't know anything about. I had a huge firm. I started in Russia, which basically I hired the guys. I did exactly the same as Richard Dennis did. I hired the guys. I give them my own money. I teach them, and I saw at one point they made tons of money, and then they start to drop for one simple reason: they stop following the rules because they felt too comfortable. That's the major problem, not the market, not the flexibility, not the liquidity, not anything. Of course, whereas the market is less liquid, you make more, you make less money. But when the market is normal and there's moves up there, you can make huge money, huge. There's always 20 different stocks a day. If you do homework, you can figure it out. But 90% of the people, they cannot even do homework. Me, as I said, just for you to understand, I have a bunch of pages.
So what's the best setup you're looking at right now? One or two?
What do you mean setup?
Trade price action right now, looking at the charts that you're currently monitoring.
Okay, I'll show you. What I'm looking for. You try to take me to the wrong direction, but I'll show you what I'm looking for. And it doesn't matter what I trade, like cryptocurrency or anything else. I'll show you a few
Yeah, of
stocks.
course, it's just a setup. You're looking at patterns, and so yeah, I was just wondering what, is there a symbol, a currency, a equity, a
I'll
commodity?
show you right now. It's not. I never basically call it a setup. For me, it's a little different thing. As I said, for me, the most important thing is to see where basically the people are gonna drop, where the people are gonna go crazy. So, for example, I'll show you a few stocks. Okay, this is why I basically would short the stock. The stock symbol is MXR for one simple reason. First of all, it's drop and nobody buys. That's the one thing. Second of all, basically somebody eat the huge volume right here, but they couldn't take the stock higher. They basically take a little bit to get a little bigger position. So what it is, the most important thing, it's again $5, and I'm gonna look for somebody to drop. That's very important thing. For me, the most important thing, how the basically the price of the stock is react to the everything else, to the move. And the very important thing, when I identify the stock, for me the most important thing, the stock not supposed to trade with S&P. I don't look for the beta, I don't look for the alpha. For me, the most important thing, the chart has to be completely different and totally away from the S&P. If the chart looks somehow like S&P, I would never trade that particular stock. So what it is, I try to figure it out. Once basically I look at the stock, I see how the stock is going to behave, and then I'm going to try to figure it out what to do. There's another stock, BRC. You see, there's a huge limit seller, and most of the time when the picture looks very pretty like this, one thing for a fact, most likely it's going to be false for one simple reason, because the huge player, he's not going to let you walk away with such an easy.
So would you look to
This
sell short this with a stop just above those highs?
in this case, I definitely not only sell short. For me, the most important thing, it has to break, and then I'm going to see how deep is the falls. If the falls is very deep, most likely I'm not going to enter the trade because the risk is a little bigger. But if the falls, usually in this case scenario, the falls are not big. They're usually not very deep for one simple reason. If he needs to build a position, he's going to try to do short falls and don't let anybody out, and then he's going to try to move faster. Because when the picture pretty like this looks like this, he definitely going to do something not what everybody is expecting. Because most of the time, most of the people are going to put the buy stop right here or anything above 46 and say, listen, that he's accumulated the position and everything else. He does accumulate in the position. One simple reason. After the huge move of, let's say, 15%, he's not pulling the stock down. So this is a good sign. But the bad sign, it looks too pretty, basically, to do a simple breakout and everybody and let everybody to make money.
So
Yes.
just looking at this chart, though, so let's say my question really is, okay, let's say it starts moving in your favor. How do you determine when is the right time to exit the position? So it's moving where you think it is. It's been a day, 2 days, 5 days, whatever it is. How do you determine when it's?
Most of the time, I look for the three parameters. The first one is how far is the levels. For example, I'm going to figure it out the level where the stock can go, because most of the time, 90% of the time, stock would move from one level to another. It goes towards the volume. Whereas the volume is, he's going to look for one price, from one price to another, from one level to another. That's the most important thing. So, for example, if I figure it out that the level is right here, somewhere 43, then I look for the different thing. I look how the stock is moving. If there is a huge and fast move, then the stock is ready to get out. For example, if I see something like this, usually most of the time it's the end of the game. I mean, for one simple reason, there's accumulation and there are distribution. So if I see a huge and fast distribution, I definitely going to get out. And then I'm looking basically not only for the speed, I'm looking how the stock goes. So this is the three things I'm looking for. But the most important thing, if I like the level, for example, right here, I'm going to try to see to a different level. And then the fourth one is a little different scenario. When I see how the stock moves, I figure it out what to do next. For example, if you easy go to, let's say, $43 in this case, just in case, to $43 and then continue to go lower, right? I'm not going to close the position. I'm just going to wait until it's going to break 43. If it's not going to be false, I'm not going to close. So for me, Out point is when the stock shows either weakness, either he cannot go any longer, or I see basically the energy is gone.
Interesting. Yeah, that's really good. A lot of those questions I've asked you, I hope you know they are from members of our chat room. Have been enjoying the conversation and inquiring about different things with your strategy.
Sure. While you have a few questions getting ready, I'll show you a few more things. For example, okay, this is the not expensive stock, but this is just to understand. That's what I'm looking for. I'm looking for something where I have no risk. You see, no risk entrance from the level $1. So what I'm looking for, this is just $1, but as I said, I have a lot of stocks, which is over $30, $40, $50 a share. But my job is, I try to make money on the chart. For me, it doesn't matter, as I said, what the stock do. I can trade.
So in this example, you entered at $1, but where was your
$1,
stop
$2,
loss?
$3, of course.
Well, the question is, where was your stop loss, and then where did you take profit?
Basically, the stop loss right here, right before the level, because if it's going to drop anything below the level, I'm out for one simple reason. I don't know if it's going to be false or if he's going to take the stock lower. And usually in my takes, as I said, I get out right here at $1.65 right here when it starts to pull back for one simple reason. When I see something like this, I would never expect a huge move like this. Don't forget, my big plus and big minus is being a day trader. This is this kind of position. One thing for a fact, they move fast up and down. So you got to be in and out very fast. But there is some trades which you see, I'm waiting for something like this. For example, this is a $70 stock. Here, what I'm looking for is, you see, there's a huge level. Why is a huge level? As you can see, this was a huge level. We went up from that level. So if somebody buys here, you see after the volume started dropping, there's no seller. Here, it was a false breakout. LP, it's in Russian, ложный пробой, which means false breakout. Here, I would definitely look for something over here. What I see here, it's a very small dip. So the false breakout is very small. And I definitely here would enter the trade right here at about 62.05, 62.07, and put a stop right up below the level. Because if it's going to go lower, then it's a retest, and it's going to go much lower.
Excellent. All right. Look, Alex, I really appreciate you sharing your screen, talking about the markets. You have a lot of detail, which is really good. People really like to follow those technicals. It's interesting. I'd like to have you back another time.
Absolutely, at any time. For Larry, anything.
So just to give everybody an update, you came to our office a week or two ago, and
Yes.
you interviewed Larry. You have a YouTube channel that you interview
Yes.
a lot of different traders. You had Jack Schwager on recently.
Jack Schwager, Perry Kaufman, yes.
And so what do you get from speaking to these guys in terms of what knowledge, what do you find really interesting when from these interviews from a lot of successful traders you've sat down with?
I give you two words. The first one is everything. For one simple thing, when the trader, what the beautiful part is what the Larry does with the optimistic trader. It's what I like about when the people can talk to each other. For one simple reason. When the people who understands the market, they talk to the people who understands the market better and had a much longer experience, the trader has two things. Either one is good for him for one simple reason. When I talk to Larry, I concur. I learned, by the way, that word from the Catch Me If You Can, I never knew what that word means. So when I heard the word concur, I went on the internet, I figured it out. So I concur with Larry for one simple reason, that the market didn't change. You have to have a plan, you have to have systematic trading and everything else. So I concur with Larry, what he does. Or if I see somebody is doing something better than me, I try to figure it out. What's in me, it's not enough to be like someone else. Well, Larry traded at one point almost $1 billion. Larry been in the industry for 35 years. He's been in the floor and everything else. When I see the person like him, I close basically my mouth and I open my ears and I listen. And when I sit with Larry, I concur with a lot of things that I do, which basically like a honey, you understand, to the honey, to the tea, where you feel so comfortable because you have a much bigger guy and much better guy than you. He speaks your language. Because when you speak with the other traders and they don't speak your language, it's very hard to understand. You understand? You talk to the guy and the guy tells you, I know I have my own style, blah blah blah. But you have somebody who is 50 times bigger than you. I did made a lot of money in a market, tens of millions of dollars. But when I see somebody, who is longer, because just for you to understand, Larry been in every pretty much pace of the market from 80s, 80s and 90s and 2000. And the guy is still trading right now, which shows the system is unique. And it's not only unique, it's basically flexible for every single market. Of course, he's not sitting and waiting until the oil is going to drop 50% and he's going to make tons of money there. I saw the way he trades. I saw the way he looks at the telephone, everything. One thing for a fact, a person loves what he does. And this is a very important thing. When I talk to the people who's in trading, I did the interview with a very interesting person. Unfortunately, is in Russian, Pyotr Kambolin. The guy used to run $1 billion fund, made a lot of money, but then basically they had a big breakdown. The investors took all the money, from almost $750 million. They left with, I think, $30 million. You know what mistakes they do in it, you understand? And if you're smart enough, you will just listen and would not do the same mistake. For me, this is the most important thing.
Yeah. All right. Well, hey, thank you very much for taking the time joining us.
It was my pleasure. Anything for Larry.
Yeah, I'll have the replay available for you, and we can check it out. A lot of great information. Have a great rest of the day, and we'll talk to you soon.
All the best. Thank you.